So BB Healthcare Trust was born out of Bellevue Asset Management's investment trust team, who run BB Biotech, which has delivered over a 24-year period a compounded 15% total return. The focus of BB Biotech is solely on the biotech subsector of healthcare, and we felt there was a lot of synergy in having a broader investment trust sitting alongside BB Biotech that can invest in other areas of healthcare that we see as very exciting over the next few years. So rather like BB Biotech, it's a concentrated portfolio. We invest in a maximum of 35 companies. It's global in its approach and it's unconstrained, so we pick best ideas in healthcare that play into long-term structural themes that we think are attractive, and that's the strategy of the fund. And it has an income component as well, like the biotech fund. It launched on the 2nd of December 2016. There are a number of key differences from other investment trust products that focus on healthcare. So firstly, there is, as I mentioned, this unconstrained mandate. So we will look at any area of healthcare that we think is interesting, and more importantly, we're benchmark unaware. So we won't be invested in areas that we think are unattractive. So we will pick solely the areas that we think are very strong, and we will concentrate on those. We have a very engaged board. So typically the board of an investment trust is a hands-off facility that's just focused on corporate governance. Our board is composed of professionals from the healthcare arena and professional healthcare investors. They're very much engaged in the strategy of the fund. They're paid in shares and they're locked in, so they're very much co-investing alongside everybody else in the success of the venture. And we construct a dividend, so we will pay a dividend equivalent to 3.5% of the net asset value. It's very difficult to invest in the high quality end of healthcare and also receive yield. So if you think about healthcare generally, it's a very US oriented sector. US companies tend to be focused more on share buybacks than dividends. It's a growth sector, so income is less important. So when you see companies that have high payout ratios, they're typically slower growing. And when you see high dividend yields, they're often mature or distressed assets. So if you try and construct a portfolio in healthcare that has a high yield element to it, what you tend to find is the projected total return over a long period of time is not very good. So what we're doing is we're focusing on total return and we're manufacturing the dividends. So that means when we pick companies, we're completely agnostic to their natural yield. We pick the companies we think will generate the most return over a 3 to 5 year period, and then we give you that back in the form of a constructed dividend of 3.5%, which is broadly equivalent to what you get from a FTSE 100 portfolio, and the rest as capital growth, which in turn will drive annual growth in the dividend as well. So I would say they are the key differences. The final thing I'd like to mention is we have an annual redemption facility, so that's a discount control mechanism that's proven to be highly effective when used by other trusts. Over the life of BB Healthcare, we've actually traded at a modest premium to NAV. But what the redemption option means is that once a year all investors have the opportunity to tender part or all of their holding, and they should receive close to NAV by return. So it guarantees you some liquidity, and it also acts as a discount control mechanism. Healthcare is, well, we live in very uncertain times, and I think from a macroeconomic perspective, and I think healthcare is one of those things that everybody can easily understand, that they're very strong demographic underpinnings for it. So we have an aging population. Most of healthcare expenditure comes in the later years of life. We have increasing wealth in all sorts of different countries. That generally you see a very strong correlation between increasing GDP per capita and the proportion of that increase that gets spent on healthcare. So generally, as countries mature economically, they converge on the OECD average of healthcare expenditure as a portion of GDP. So it's one of these areas where you can see over 5, 10, 20 years robust demand growth for the products. It's also an area of very significant innovation for continuous scientific progress, and one where